Hello, traders. It's 8 a.m. Chicago time on the first day of July, also the first day of the new quarter Q3. Um, Thanks for joining me. This is episode number 1788. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopefully, you're hearing me loud and clear. I'm not really sure. Let's dig right in here. The first thing I want to do is remind everyone that 4th of July is the Saturday, and it is observed on Friday. Friday's a half day in the futures markets, expecting very little volume and expecting the market to just chop around. Tomorrow is the last day of the week, technically, so just keep that in mind as you're trading. This morning, crude oil taking a lead. It showed a draw in the API stocks yesterday. It is trading up 42 cents in the August contract, or 1.07%. The S&P is up 5 points. It was down for a lot of the session. It's rallying currently. The Russell's surprisingly unchanged. The Nasdaq's down just a point and a quarter, which is very, very little. And the Bund is off an entire point or 100 ticks. The Bund is taking a bit of a beating. Gold is down $8.40, trading at 1792 and 10 cents, or down 0.47%. What I'm looking at here is a very, very mixed bag in terms of risk allocation and what the market sentiment is. There's a lot going on, of course. You know, the arrests in Hong Kong, the new North American Free Trade Agreement is in effect, and there are apparently some issues with it already. But Europe had a bit of a technical issue. European markets had a bit of a technical issue this morning. But the China's factory activity, what came out strong, the Nikkei ended lower as Bank of Japan's Tankan survey showed business mood dropped to the worst level in 11 years. And that's where we stand. ADP came out this morning. There's just a ton to go over. Let's look at what was released. What was released overnight. Again, consumer confidence in Japan, 28.4 versus 30. Quite a few numbers came in overnight. Market manufacturing, the key of which is ADP. U.S. ADP employment change showed plus 2.369 million jobs versus 3,000 or 3 million expected. We still get market manufacturing PMI in the U.S. final at 15 minutes after the open, and ISM at 10 a.m. Eastern as well. So with construction spending, the calendar's very busy today. Again, we get market PMI at 9:45. We get ISM manufacturing at 10, along with construction spending. We get Fed's Evans at 10 as well, and then we get the crude oil numbers at 10:30. We get the FOMC minutes at 2 p.m. And then this evening, balance of trade out of Australia at 9:30 p.m. So that's where we stand this morning. That's where we're headed. So with that being said, let's take a look at what's expected. What was expected yesterday versus what we got. So scenario one played right on point. Remember what I talked about yesterday is right here. It didn't quite put the zero in there. It's 3,100. That there are two key distributions, and we were opening on top of the lower one at 38, and the upper one is at 3,100. And the expectation is the market is likely to push, and I warned shorts that this is not likely to be a good day. That one-time framing The one-time framing down that was put in over last week is likely to come to an end with the push through that 48.75 and through 50. It is likely to continue, and the target would be 3,100 on the rally as we move from one distribution, one balance zone to another. And that's exactly what it did. Here's what actually, so scenario one, open an open auction and push higher and through the overnight high and through 50 and continue higher. Again, the end of quarter, end of month, wasn't sure how that's going to play out, up or down, and just wanted to bring that to your attention with those arrows. Here's what it actually did. Let me turn these stock zone levels off. Let's go, buddy. Oh, yeah. So we open up in what looks like a bit of an open auction. Not sure. It was very difficult to read. And it's just, straight up from the open into this channel, pulls back right to the mid right here and continues higher. And where does it get to? It gets to 31.01. Basically, what was expected. However, being conservative with my expectation in terms of range, I'm playing with what is the current close to close range. I didn't expect it to actually hit 3,100. I did explain that this is the key target above. Um, so my range expectation was 3080 right here. 3080 was what I was looking for, and it had pushed all the way to 3101, getting us to the key target above, and that's why that's where we ended up. So, and bye bye. And that's where we ended up. We ended up back in balance. This area here, this cluster is really important. Again, 3,100 yet again with expiration behind us, with rollover behind us, expiration behind us, and so on. Here we are back in the 3,100 zone, and that's where we stand now. Knowing that the opening price is down here at 30.3875, the green line, and knowing that the opening price represents zero on the delta, look at what the delta did. The delta really played along with price all the way up, but was very quick to get back towards zero at the end of the session. It seems like when it got to 3,100, there was a lot of selling interest, and I don't know how much of it is clouded by the end of the end of quarter, end of month, but we see that it's stalled, and it did so with Delta kind of hitting, with traders hitting the bid and exiting positions, it seems, into the close. So this is important to note for today, because we want to see today if the momentum carries forward, or if it is likely to falter and have a pretty deep pullback. Pullback is expected. If it does pull back, it's expected to 36 to 3060 area. If you recall, this area is important, which is the overnight low, which happens to be the overnight low for the current session. So that's where we stand overall. Now, let's take a look at how that carries over into the overnight session. Here's what the overnight session did. Pretty quiet open. A very clear excess, on the close yesterday. Again, end of month effect. Very quiet session until the European Open right here. The Asian Open was just fairly quiet, and then the tests, the European session tests higher, and then has this retracement, pretty deep retracement, which we just took back the delta is negative. The delta is negative. Inventory is mixed. Inventory is flat overnight. And so overall, we're opening up with this kind of a mixed view. 360,000 contracts traded in the overnight session, and what is a very balanced profile with a clear neckline below, and we're pushing highs as as I speak. So we just pushed the overnight high to 3102.75 and have pulled back on pretty good volume. Just it's everybody knows that this is an unprecedented market. There's really an incredibly unusual set of circumstances here, and the behavior by participants is very unusual. The activity by the Fed and the central banks is very unusual, and it just creates it's kind of defying all economic principles and logic. And so, what does that mean? It doesn't mean that I have an expectation for the market, but what it's doing is it's kind of causing those global macro gurus to scratch their head a lot with every position that they take, including funds, large funds, and so on that trade on fundamentals. It's causing a lot of kind of just puzzled looks, and so overall, uh, this can cause extra volatility, and it can cause the market to be very active in its price discovery, and that's what we're seeing. We're seeing this strong kind of movement up and down. We do have some stable liquidity at 3060. That important area I just outlined happens to have the stable bid that was expected to be the pullback if, as I just said, once we push into 3100, the pullback was expected to be 3060 and then above 3110. Now, normally we have a large offer at 3100, but we've already kind of pushed through that. We pushed through it yesterday, and we see that the market has got participation from the bid and offer on both sides, peaking higher with full depth. We have size coming in at basically every 10-point interval, 3120, 3110, and so on, 3090, and so on. I expect that today there will be some pretty decent activity. I'm expecting that today it is likely to take out yesterday's high at some point, but I'm also expecting it to really fail to continue to push through. I'm expecting it to rest a little bit. I'm expecting the market to be exhausted today. Again, we're going into a holiday with Thursday tomorrow being the last day of the week. We have to take that into consideration as well. So that's where we stand. Let's switch back and look at what's expected for today. So the first thing I'm going to show you is that is the area that we've been working with. So the profile on the right, let's clean this up. So the profile on the right here is very important to pay attention to here. We moved from this lower distribution to 3100. The line here, the black line here, outlines the the most traded price in this region since the 11th, since the gap down on the 11th of June, and we have moved from one high volume distribution to another, and we have tested it with what looks like an excess high yesterday. This excess high is leading me to believe, even though we're trading at 30.96, leading me to believe that it's likely to stall here. And not only is it likely to stall because of the VPOC, but because this is acceptance. This is a high volume node. And so we would expect the market to churn in this area. When the market moves into a price that has shown acceptance in the past, it generally has a very hard time pushing through on the first go. It might poke by a few points or whatever, but in general, it is likely to get trapped in there because that is considered value, and the other side starts participating as well. So this morning, we are basically opening around this line, around the MC point of control, the most traded price in this region. So let's bring back the details here, the Stark zones and so forth. One second. And so we are kind of pushing into this upper balance. And so this morning, I'm expecting an open auction that attempts lower, pushes through, and finishes yesterday's work. The one of the key things we learned from yesterday is that run up happened on the close, and it wasn't enough volume or time to transfer the point of control to the upper distribution. So we have this kind of neckline at 3078, and we didn't push the VPOC higher. We didn't finish. We finished in the upper part of the range, but we didn't finish near highs. So this is, again, the reason why I believe that it's likely to push through and falter. So I'm looking for it to push through the overnight high and then pull back. And I'm expecting it to pull back to 3078, potentially even the point of control at 3070, and hold steady. So I'm not looking for a breakout and run type of scenario. It's a lower probability. Anything could happen in the market, of course, but I'm not expecting it to kind of, you know, open and drive higher. There's probably not enough stimulus. We have to watch out for the FOMC minutes at 2 p.m. Eastern today to see how things look in the afternoon. The secondary scenario is an open auction that just simply responds back, gets to 78, consolidates. This is the overnight point of control area, falls through into 3070, into the point of control, and then consolidates here for a while and then starts to drift up on the close. Okay. Now remember, last quarter had the best performance we have seen in 35 years or something like that. But of course, the quarter before that, we saw some of the worst performance we've seen in decades as well. So we're still, overall, we're still below where we were when the COVID-19 crisis started. So there's not all that much to celebrate, but this rally up has been very, very strong. And so these are things we need to kind of keep an eye on. So those are the two key scenarios. The other scenario is scenario 3. I won't draw on here. Is an open test above yesterday's range, and then again drive down. And in that case, in that scenario, we're looking at pushing back towards 3038, which would be surprising. In fact, let me draw that on here in case I need to refer to it tomorrow. Open, push up, test, drive down so that we have an impulse down, drive down, consolidate, and then push towards yesterday's low, towards the 3840 area before the bounce. So this would be scenario 3 out here. Okay. So that's what we're looking at. Good luck today, and I'll catch you tomorrow. Hopefully you keep gaining something new out of this every single day you're here. Good luck. I'll talk to you later.